Holy smokers, that ain't no dang jokers. Who forgot to flip the flapjacks? They're completely burning in this place right now. Look at that. Big tech stocks getting hammered today. Shopify down 5.6%. PayPal down over 5%. Google and Snowflake down close to 5%. Amazon, Netflix, Meta all down about 4.5% each here today. Oracle down over 4%. Tesla, Microsoft, AMD, MU all getting hit hard here today. MU all the way down to $88 now at this point in time. Micro tragedy down another 10% here today. HIM stock down to $29. It seems like just yesterday HIMS was $70+ and it's 29 here today. Coinbase down another 7% here today. Palantir getting hit hard. Robinhood getting hit hard. Tesla, right? Whew. And those were the stocks everybody was piling into at the end of 2024, going into 2025, and they just continue to get pounded. Everybody's favorite yoga pants, Lululemon, down about 15 percentage points here today. Consumer sentiment worsens as inflation fears grow. We have, when I first got started in the stock market, everybody was talking about double dip recession. Now everybody's talking about double dip inflation. The inflation fears are full go. Sentiment was so bad out there, I figured I would go to Taco Bell today. Yeah, I was like, Chipotle, no. We're going to Taco Bell on the Ferrari today, okay, baby? Alrighty, so 3 core subjects I want to speak about here today, okay? One is I got to take you guys through some very important data in this video here today. Very important data, and show you what's going on here so you can understand where this market's headed. Number 2, we're going to talk about the potential of a face ripper rally after April 2nd. We know everybody's freaked out. Everybody's scared of April 2nd. The Judgment Day, or whatever they're calling it, right? Oh my gosh. What happens after that? Could we actually go into a face ripper rally? We'll speak about that. And third is, I'm going to show you an asset that is at all-time highs today. This asset goes up basically every day right now. It is absolutely ridiculous. It's like free money they're giving away. It's insane, okay? And I'm going to share that in this video here today as well, okay? I appreciate everybody joining me as always. I hope you guys appreciate me keeping you in the loop in regards to all this stuff. Only one thing only I ask from you guys is for you to smash that thumbs up button on this video. If you want to subscribe, you can certainly subscribe to the channel. We are 840,000 plus subscribers strong. And I'm always here for you guys, regardless of the market, whether we got a bear market, bull market, kangaroo market, any type of market. I'm here for you guys until the day I retire. And when that day comes, you're on your own, okay? You're on your own at that point in time. We have the massive sale coming up here in only a couple days from now. It is for the top tier of my Patreon. Full access to my Become Master Stock Market course. Access to see the stocks I'm buying and selling each week. Exactly how I build a portfolio with real money. And access to the Patreon Discord chat. This deal could not come at a better time for a lot of you guys out there. Because I know a lot of you guys got in the market last couple of years. You know, you've been kind of just throwing some money around in stocks. You don't really understand how to value companies, how to understand financial statements, all this type of stuff, right? My Become Master Stock Market course teaches you all that sort of stuff. And so this deal could not come at a better time, because I know a lot of people have been hit hard this last month and a half, and they're like, crap, man, I should probably take this a little more serious and just stop throwing money in stocks, right? So could not come at a better time for you guys. If you want access to that deal, click the pinned comment down there right now. Fill out your name, your email, and if you want the text to receive the deal via text as well, you can put in your number. We'll send over that sale. That's how you're going to get access to that sale. And it's one day and one day only. It's April 1st. And every time I do a sale, I only do a few sales a year, right? Every time I do one, people always ask me days later, oh, you know, I want to get the sale. Can I get it now? No, it's that one day and that one day only. And so if you don't get the deal on April 1st, like, too bad, so sad. $49 access for that one day, and it's well worth it, believe me. The amount of comments I've seen over time, like, the Become Master Stock Market course is well worth the price of admission, okay? Alrighty, let's get started here somewhere very, very important, because we have a massive divergence that has just transpired. What we're looking at here is the AAII investor sentiment. Now, I show you guys this quite often over the years. They've been doing this survey all the way back to the 1980s. And the survey, most of the time, not that important. It's whatever. The time periods it's most important to look at this is when you are in a very bullish market or a very bearish market, right? Right now, we're in a very bearish market. The market has sold off heavily over the past, I would say, month and a half. It's been very bearish, right? And so whenever you're in a super bullish market or bearish market, that's when it becomes very important to see how, like, where is sentiment at? Now, we have the latest sentiment numbers came out yesterday. Brutal, absolutely brutal again. Another 52.2% of investors are bearish on the stock market for the next 6 months. That marks 5 weeks of, I mean, this is among the worst bearish activity you've seen in the history of this survey. That dates all the way back to the 1980s. Like, you could go back to time periods in the Great Financial Crisis, 2020, the 1980s, the tech bubble, and when it burst. I mean, any time period, really. And you've just about never seen it this bearish. It is so unbelievably bearish in regards to the survey, it's not even funny. Now, the craziest part of this is it shows you how fast sentiment can switch in the stock market. I always tell you guys, man, it can go from everybody's just doomsday to a few months later, everybody's like, looks good out here, right? And it works even faster when you're talking about going from a good market to a bad market. Because all of a sudden everybody can see, we're only going to the sky, like only good things happen in the market, right? To all of a sudden, in a matter of just a few weeks, look at how bearish it got. Now, this was right around the time of the Trump inauguration there, right? And at that particular time, only 29% of investors were bearish on the stock market for the next 6 months. And look what happens 6 weeks later. February 26th week, 60+% of investors were then bearish on the stock market for the next 6 months. Man, does it shift fast, huh? Isn't that incredible? And then look at this. We went from, at that particular time, January 22nd, that week, right after Trump inauguration there, 43% of investors were bullish on the market for the next 6 months. And then look where it goes eight weeks later or so. All the way down to 19%. Only 19% of investors are bullish on the market the next 6 months? That's a ridiculously low number. Like, that's like almost no one believes in the market. Like, not even one out of five investors are bullish on the market for the next 6 months. Oh my gosh. But we have a very important thing that has now transpired. Is it does look like the bearish sentiment has bottomed. If you look just over the past couple weeks here, we went from 19.1% bullish on the market the next 6 months to now recently 27.4%. We went from 59.2% bearish to now 52.2% bearish. So it's clear that two things are clear when you're looking at this. One is sentiment is still extremely bearish. That's clear as day, right? The second thing that's clear is it's getting less bearish, which means that's when actual bottoms start to form in the market, when things start to get less bearish. People start to get less negative. That means they're more likely to buy stocks, right, which puts buying pressure in the market, and they're less likely to sell stocks, which puts less selling pressure on the market now at this point in time, right? Now, I was reading this article earlier. It says Las Vegas, the city I live in, lures Seattle millionaires fleeing taxes on their wealth, and I was reading about that, right? And the same thing that happens in that article, it happens to investors. When investors, they'll flee out of stocks in a very quick amount of time, right? And they'll flee to where? They'll flee to cash sometimes, and they say, you know what, I'm just going cash for now. I'm just going to hold some cash, right? Or they flee to other assets. So they could invest in commodities. They could invest into other stocks, like what I'm going to show you right now, my safety stocks watch list. Look at this. You might think there's no way there could be some green stocks out there today. With how Red Dead Redemption the market was, look at the NASDAQ got wrecked today. There's no way there was any green. There was green out there. Clorox was up today. Yeah, if you sell bleach, guess what? You were green today. Kraft Heinz, if you sell ketchup and mustard, you were actually up today. Kroger, the biggest grocery store chain, was up today. There were stocks that were green today, despite the NASDAQ getting absolutely obliterated and the Dow dropping, 700 points or whatever, right? You want to see something fascinating. Kroger stock, the biggest grocery chain out there, listen, it just hit an all-time high. The sneakiest all-time high maybe in the history of the stock market. Absolutely insane. It hit an all-time high. And by the way, that's not the asset we're talking about today that goes up almost every day. Although, geez, Kroger has been pretty darn impressive, right? A grocery store chain hitting all-time highs? Isn't that fascinating, right? Now, this goes into the consumer sentiment, right? Because we're seeing clear as day, investor sentiment's garbage, horrible. People don't want to own risk on stocks. They don't want nvidia, right? Nvidia sold off again today. It seems like it sells off every day, right? They don't want any of the big tech stocks. They don't want anything. If investors, if anything, they just like, put me in the mustard, put me in the grocery store, and let me get some bleach, and I'm good, okay? That's investors. But what about the average person, because most people aren't investors. Most people in the American economy, they're not active investors thinking, which stock do I want to buy? Would I like to buy Tesla today or Meta? No. This is what the average person is doing out there, right? We're looking at the consumer sentiment here. Now, the newest consumer sentiment numbers came out, and it was around 57. Horrible, awful, trash number. But the one thing I'll push back on here, it's actually not as bad as the sentiment got in 2022. Believe it or not, the sentiment was even worse in 2022. And that was because of Russia-Ukraine, followed up by out-of-control inflation, like numbers we had never seen. Like we're talking 10% CPIs, or close to 10% CPIs, like ridiculous numbers, right? And also a lot of people didn't believe in Biden. So that was a pretty insane sentiment. But the fact that we're starting to approach those levels is very, very telling. And a lot of people are now starting, even some folks on that side are starting to now question the Trump administration about, like, you sure you know what you're doing here, right? And consumer sentiment keeps dropping. People are getting more and more freaked out about inflation. They're hearing about tariffs. And people understand more about tariffs now than they did, I would say 6, 7, 8 years ago. And people understand if tariffs do actually go through, prices are going up for the average person. And the average person already has been traumatized by inflation. And so when you all of a sudden start talking about tariffs and, oh, by the way, that cost is going to get passed on to you, because that's what always ends up happening, the average person starts saying, dude, I'm traumatized by this. I already got hit insanely heavy in 2022, 2023 with inflation. And finally, it seems like we're getting a little bit of a breather in regards to inflation, and you're telling me I got to gear up for another big round of inflation, and prices are going to go up 5, 10, 15, 20, 25%? No way. And so that's leading to this really bad consumer sentiment. And if you look, so basically the newest numbers are right about here, 57, right? And if you look, that's among the worst numbers we've ever had, right? In 2022, it did get worse than this. The great financial crisis, very slightly worse. Like, think about that for a moment. We're at consumer sentiment numbers right now that are almost as bad or among as bad as the great financial crisis, when unemployment was exploding to the upside. That's how bad sentiment is right now, right? And it also goes to show you how bad people fear inflation. People care more about inflation than jobs. Why? Let me explain this, because this is a very important economic thing I explain here. Listen, if unemployment rate goes to an insanely high number, which would be like 10%, really high, right? Okay, that means 90% still have their jobs. If CPI goes to 10%, who does that affect? Everyone. Everyone. That's why the average person actually cares more about inflation and making sure inflation's not wrecking them than actually unemployment, which is crazy to think, because usually you think because at the end of the day, most people are going to say, I'm going to still have my job. Regardless of what happens, I'm going to have my job, right? I'd rather have low prices than have my job. And yeah, for the few percent that lose their jobs, that sucks. But you know what? I still got my job. That's the way the average person looks at it, right? But inflation, there's no avoiding that. That affects everyone. If a gallon of gas costs $5 a gallon, that hits everybody, right? Unless you got an EV, which is not that big of a percentage of the population, right? If all the food store prices go up 20%, guess who that affects? Everyone. Everyone gets hit by that. There's no avoiding that, right? And so, remember, most folks out there make less than $100,000 a year. So for your everyday goods going up like that, it hurts you bad, which is once again gets back into why consumer sentiment is so bad right now. Consumer sentiment is so bad because all people are hearing about is Trump tariffs, Trump tariffs, Trump tariffs, and they're looking and they're like, oh my gosh, like everything's going to go up in price. And people are very traumatized by this right now. They do not want to have to go through another 2022, right? So that's what's going on out there, and it's the same thing that's actually freaking out the market in quite a substantial way, right? Now, additionally, this is really fascinating because this is good news and bad news. This new economic data just came out today. Bureau of Economic Analysis here. So what we're looking at, what I'm showing you here right now, is disposable personal income, outlays, and savings. And what we're seeing right now is people are actually saving more money. I know, hard to believe. Americans saving more money? No, it's actually going on. And this is seasonally adjusted as well, by the way. But yeah, right now, what people are doing is they're still making good incomes, but they're deciding to save more money. Because of why? Because they're probably uncertain. They're scared. They don't know what's going to happen with this tariff stuff and Doge and all this stuff. We don't know. It sounds scary. I'm going to save more money. Now, the bad news with that is it's basically money that could be being spent in the economy, right? Somebody could be going to the Lululemon store and buying some more Lululemon pants, or to the Nike store and buying a new pair of Jordans, right? Or could be going to the restaurant, but instead they're sitting on their hands and they're not spending as much money, right? Which, this is how you can get an economic slowdown. Let's say I was in the market for a Ferrari, which I'm not in the market for a Ferrari right now, but let's say I was, right? With everything that's transpired here recently and all the worries and whatnot, if I was in the market right now, I would probably say, you know what? I'm going to chill for a little bit. I don't think I'm going to make any purchase of Ferrari right now. I want to see like how all this stuff shakes out, and then I'll make my decision, right? So, which means then I'm kind of in a waiting period, which means my savings go up, right? But that also means I'm not spending that money in the economy, which means the sales guy can't make a commission on that. That means the dealership can't make money on that, right? So that hurts the economy in the end, right? Because now I'm sitting on that money rather than spending it, so money velocity slows down there, right? And that can happen to an extent to like buying a new Ferrari, but it also happens to an everyday person, right? So, lady says, you know what? I'm hearing about all this stuff. I'm getting freaked out. Tariffs, I don't know. Doge, is my job going to be cut? I don't know. So you know what? I'm not going to go spend $130 on a new pair of Lululemon pants. I'm gonna get generic off-brand ones from Amazon. That's what I'm going to do instead. And so it hurts Lululemon. And then Lululemon doesn't quite have as many customers. So Lululemon has to cut some hours at, the place. And so then the workers at Lululemon who run the register, they don't quite get as many hours as they had before, right? Which means their income goes down a little bit. So that's how it all ends up playing into the economy. And that's why these sentiment surveys are important, because they can start to show you that this sentiment, this data, can actually start really affecting the economy, right? And so that's an important thing to understand about this whole game. By the way, Lululemon's numbers looked really good for the last quarter. They just reported here this past week or a couple days ago. A- quarter I graded here. Revenues look good. Gross profit looked great. Almost $2.2 billion of gross profit versus $1.9 billion, right? Net income went to $748 million from $669 and $614 diluted EPS. Phenomenal numbers. A- income statement. Well done, Lululemon. I think there's a big next couple of years for Lululemon, though, as we go through this time period with the consumer and everything, and, seeing how their brand makes it through. That's going to be really, really fascinating in regards to Lululemon. Now, this sends all eyes to one man. He's the most powerful man in the financial world. He really is. He doesn't talk that much. You don't hear from him that much. He's nearly 100 years old now, but he's the big Buffett. Warren Buffett, right? All eyes are starting to go to Warren Buffett because all of a sudden everybody's remembering, wait a minute, remember that guy who sold out of stocks massively and has like all his money around? That Warren Buffett guy. I wonder what he's up to, right? If you look at cash on hand, at Berkshire Hathaway, right, which is basically just looking at the cash plus the short-term investments, it's at ridiculous numbers. And basically what has transpired over the last year to year and a half is Warren Buffett decided to dump stocks like he's never dumped them before, like to ridiculous levels. And the cash pile has grown to $334 billion. And so now people are wondering, with the downdraft in the market over the past month, is Buffett out there buying? Now, we don't know the answer to that as of right now. We'll know in another month or two, but we don't know as of right now. But people are starting to wonder this, because if there's one man that can give confidence to the market more than any other man in the world, it is Warren Buffett. When Warren Buffett is buying stocks actively, it makes the market just feel better. Because Warren Buffett's viewed as the smartest man in the room, no matter what room he's in, when it comes to investing, right? You put him in the room with anybody, and he's always going to be the smartest one in the room, right? Or at least that's the view. And so when Warren Buffett is selling stocks actively, makes the market feel very uneasy. They say, the smartest man in the room is selling, selling, selling. I don't know how this is going to work out, right? When the smartest man in the room is buying, people say, okay, like it gives a level of confidence. Like if Warren Buffett's buying, I could be buying too, right? And right now we're in a time period where it looks like Warren Buffett, in my opinion, based upon Warren Buffett's latest actions, I think he's been done selling. If we were to look at what he's doing actively right now. Just the only question for me, is he buying right now? Because I think the selling part's wrapped up, but is he actually buying, or does he want this market to go even lower? And so we'll find that out. But I think that's a very curious thing. And there was an interview that was done, about a month ago, almost a month ago now at this point in time. He was very tight-lipped. The interview wasn't even really about the economy or anything like that, but they did manage to sneak in a few questions toward the end, and he was very tight-lipped about things. He would not let the cat out of the bag in regards to his feelings on, where the U.S. economy is headed, where, if he's going to be buying anytime soon. So we'll only know once we see the moves. And that still won't be found out for another month or two. But what is Warren Buffett doing right now? That's really interesting. No, face ripper rally after April 2nd. Let's talk about this. This is a real possibility. And so let's speak about this for a moment. And then we'll get into the asset that goes up literally every day and basically free money right now. It's fascinating. So basically over the past 6 months, the NASDAQ has dropped 4.5%, right? But the recent drop is the brutal part, right? Absolutely brutal. And that's all been on the back of what? Tariff drama. Like this whole drop in the markets because of tariff drama. It all starts and ends with the tariff drama because the tariff drama causes investors to be wary about what corporate profits are going to be. It causes consumers to be wary, which then causes the market to then fear about recession. And then when the market starts fearing more about recession, the consumer starts fearing more about recession. And then they hear the stock market just went down, which kind of like confirms, oh my gosh, recession. It all feeds right into this tariff. It all comes back to tariffs, okay? And so that's a recent drop we had. Now, we have had a good-sized correction now on the NASDAQ. The NASDAQ has gone down over 14% from the highs. This is not a crash for the market. This is a good-sized correction for the market. If the NASDAQ had dropped 24%, then we're in a crash. 14-something%, we're in a good-sized correction, okay? So this is like a real deal, Holyfield correction now we've had at this point in time. Now, the last time we really had a lot of tariff drama was in 2018. 2019, tariff drama, not much. That was kind of already, we were over it. 2020, obviously, the world was just focused on Rona. And then Biden didn't make much for changes in regards to tariffs. A lot of the tariffs Trump had, he kind of just kept them. He didn't do a lot of new stuff. It's kind of just same old game, right? But 2018 was really the only year in modern economic times, that we really talked about tariffs a lot. And so if you're wondering, what is the market going to do this year, you got to look back to 2018. It's going to give you a lot of clues. And in 2018, we had two very vicious drops right at the beginning of the year. And then it's fascinating because guess what? Right around April 2nd of 2018, the stock market had a true bottom. Now, earlier, it actually bottomed a little lower, but this was like the real bottom that happened in 2018. And it happened on April 2nd. Very strange. Is that not very strange? And then what happened after that is we had an absolute face ripper rally in the spring and the summertime of 2018. Because then the market, you got to understand, the market gets bored. And so the market looks at it and it's like, okay, tariff. You can only talk about tariff so much, and you got to, in order to get the market to keep crashing or keep moving down, you got to have a next new thing. You can't just be doing the same old trick and get the market to keep going down. It doesn't work like that, even in the Great Financial Crisis. I was talking to private stock group members about this today. You look back to the Great Financial Crisis, the market didn't fall 50% just because we had a recession. It was because we had housing problems first, then we had some financial institutions go under, right? Then later on, we had more financial institutions go under. Then we had confirmed recession. Then we had unemployment starting to fly. It was a whole domino effect of one domino hits another domino and everything starts falling, right? It wasn't just one thing happened and Oh, that we fell 50%. No. It was thing after thing. So now we're going to get past the scariest tariff drama after April 2nd, right? Like, boom. And then any tariff drama that happens after April 2nd, like we already seen this game. We already seen this trick now, right? The one trick pony's over. And so could you see a face ripper rally in the spring and the summer after this April 2nd? It's definitely a possibility. And remember how quickly I showed you sentiment can change. Sentiment had gone so negative, right? Let's say April 2nd, things come out not as scary as people thought. Well, guess what? Sentiment's going to probably start building more and more bullish. And more of these bears are going to start going into hibernation. And next thing you know, what do you see with the market? Up, 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 up. And next thing you know, boom, boom, boom. Then people start thinking, like, every time you get a sell-off as a face ripper rally happens, they think, oh, yeah, see, that was just short-lived, all to get the next face ripper rally. Because that's what happened in 2018. Like, you had some upward moves here, and each time you would have a pretty big downward move right after, and people say, oh, that was just a fake-out rally, all to have another face ripper rally. And then a downdraft, people say, oh, that's just, see, it was nope, boom. Oh, big downdraft. Oh, see, we're going back down to lows. Nope, boom. And so do keep that in mind, right? And remember the video I did for you guys, a day or two ago on this channel. I said, they're going to exhaust you. Like this whole period we're going through right now, it's an exhausting period. And in this sort of period is when some investors throw in the cards and say, you know what? I can't do this anymore, man. It's too exhausting. You got to just push through these sorts of time periods, take advantage of all the deals the market gives you and say, thank you, and thank you for the deals. Because whenever you go through one of these corrections in the market or you go through a crash in the market, a few years later, you always look back and you're like, gosh, what an opportunity that was. We had blah, blah, blah drama going on and, I was buying stocks and it looked ugly and no one was buying at that time. But man, am I happy I did. And that's the way it always works. 2022, it worked like that. 2020, it worked like that, right? 2018, it worked like that. 2015, it worked like that. 2008, 2009, it worked like that. 2001, 2002, it looked like that. It worked like that. Where are we going to go back to prior to that? There was a couple bouts of volatility in the 90s, right? In the 80s, same exact thing. You had some drama at the beginning of the 80s, great buying opportunities. I could take you decade by decade, and every time you get major corrections or crashes in the market, you just look back a few years later and just be like thankful, right? No, let's talk about an asset that goes up basically every day. So there's an asset that's been pitched as the new gold, right? And its name is Bitcoin. Well, Bitcoin, we're finding out, is not the new gold, as you should know, right? And as I always tell you guys in regards to Bitcoin, Bitcoin's basically a call option, put option on the NASDAQ, right? NASDAQ goes down, Bitcoin goes down way more. NASDAQ goes up, Bitcoin goes up more. That's just a bottom line in regards to that. And look at the NASDAQ down 14.2%, Bitcoin down 21.4%, right? There's only one gold, and that's the asset. It seems like it just goes higher and higher and higher and higher. Gold just hit a new all-time high today. Yep, gold, boring gold, all-time high today, which shows you how kind of freaked out the market is. The fact that the two things hitting all-time highs right now are the biggest grocery store chain in the United States, and gold shows you how freaked out people are in regards to the economy and all the fears out there, right? Now, for me personally, I own some silver. That's my preferred asset if I'm going to have some, alternative there. So I like silver over gold, right? Now, with that being said, always keep in mind, productive assets always shine brighter than non-productive assets. Productive assets are things like stocks. So think about companies that earn tremendous amounts of cash flow, right? And are able to build that into new business streams that produce even more cash flow or buy more businesses, right? And they just continue to produce incredible amounts of cash. These businesses are like money trees, right? Meta's a great example of a money tree, or Amazon's a great example of a money tree, right? Great money tree businesses that just produce insane cash flows, and they're able to invest that to make more money and more money and more money, right? Other things that would be a productive asset are something like real estate. So you got real estate investment properties, right? Those properties over a 10-year span, as long as you're in a good city, appreciate quite dramatically over a 10-year span, right? Additionally, you're able to make more and more cash flow as the years tick on. You're able to go up on your rent over time, right? Your tenants are paying off your mortgage in the end if you've got a mortgage on that, right? And then you're able to, take some of that profit and maybe invest in the next property. That's productive assets. Non-productive assets are things like gold, silver, Bitcoin, other crypto, stuff like that. Those are not productive assets. They're not doing anything for you, right? You're just hoping like the next guy pays more for it essentially, right? And so and I'll put it to you like this, right? I although I'm not some guy that has a $500 million net worth or $1 billion net worth, I view myself as someday having a $500 million net worth, $1 billion, multi-billion dollar net worth, right? And so the community next to my community is the most exclusive community in Las Vegas. It's called Summit Club, right? And in the Summit Club, you have to pay $10 million just for dirt. $10 million just for dirt, right? If you're going to actually get a home in there, you're looking at $20 million, $30 million, okay? If we went all those houses in Summit Club and we went door by door and we're fortunate enough to have the owner open the door, who they're probably not going to open the door because they're probably not even there because that's one of like 10 homes they have around the world, right? But let's say they were there. We asked them how they make their money. I'll tell you exactly how they're going to make their money. You're going to tell you they made their money from stocks, from business they own, right? Which is kind of like stocks, ownership, or real estate. There's going to be no one in there that made their fortunes because they held gold. There's going to be no one in there that made their fortune because they held Bitcoin. There's going to be no one in there that made their fortunes because they held silver. No one. No one. Not one person. They will have made their money from stocks, business, and real estate. Productive assets that throw off great deals of cash, right? Year after year, decade after decade. And that's the name of the game. And so that's the way I think about myself. And that's why if you look at me where I have all my big money, right? All my big money is in where? It's in productive assets. It's in stocks, great companies that produce incredible amounts of cash flow that can reinvest that money into their business, buy other businesses to make even more money, right? In real estate. That appreciates as the years tick on, that can produce cash flows, right, from tenants in your properties, things like that. And that's how you make it to the big bucks. And all that other stuff, that's fine for some little money over there, but that stuff will never perform better over the long term than, real great cash producing assets. It's just bottom line in regards to that. And I know there's a lot of people that, say, oh, Bitcoin's going to outperform, whatever, stock or whatever. Like, okay, place your bets where you want. I always will place my bets on the productive assets because over the long term, those things win. And that's the only thing that's been proven. And, a lot of strong arguments were made for gold over the last 30 or 40 or 50 years. A lot of great arguments were made for silver, right? And at the end of the day, like all these other assets, they always end up coming up short. They always end up coming up short, right? Like that's just the way the game goes. And the bigger those assets are, the more they're going to come up short. So like Bitcoin was great if you bought it many, many years ago when like no one talked about Bitcoin, but now it's a big asset. It's a big dog. Just like gold, silver, these other things are talked about. Everybody talks about it. Everybody knows it. Everybody owns it, right? And the more it's known, the harder it is actually to get gains. And that's what a lot of people are finding out. And so even with all the hype and excitement around crypto, it's like, look at Bitcoin's performance. It's been, not so good, down 22% now roughly in a very short amount of time. And so, productive assets, that's what I stick to. And that's all the big money, man. That's all the big money. That's if you want to make it to the big bucks, that's how you make it to the big bucks. That's how you make it to the big bucks, not the fake big bucks. Like I'm in Miami and I got a 1-bedroom condo in Miami, bro, and I'm a Bitcoin bro. No, that's like little boy money. Okay, that's little boy money. We're talking big boy money, okay? And big boy money is different levels of money, okay? All right, guys, appreciate you joining me as always. Thank you so much for being here. Once again, pin comment down there. That sale is going to be one day and one day only, and a lot of you guys definitely need help and need access to that sale. So that'll be pin comment down there. Make sure you take advantage of that. That will definitely be well worth the price of admission in regards to that one. Much love and have a great day.